Well, you may have noticed lately as stocks go down, gold prices go up, hitting a record $1,700 an ounce on Monday and going higher from there. Let's bring in Mihir Dange, the gold options trader for Arbitrage LLC from the CME. Thanks for being here. Appreciate it.
Thank you.
Who is buying up gold? Are we seeing more retail traders, more of the average investor jumping into gold, looking for any sort of flight to quality, flight to safety, if we can call it that, or are we still looking at the big institutionals doing most of the trading here?
I think you're seeing both retail and institutional buying. When you have a tremendous sell-off in the equities, traditionally you find that same sell-off in gold. And that's what happened in December of '08 when we had the flash crash. But we're not seeing that now. So we're seeing that disparity, which means that there's a lot of retail and institutional buying. It means that people don't feel that their money is safe with currencies, with crude oil, with any other commodity other than gold right now.
Why do you think that is? It's very interesting because the kind of equity sell-offs that we've seen in the last week have been akin to what we saw in 2008. However,
Right.
You're seeing a very opposite play with gold. Why is that? Why is it different this time?
Because the U.S. debt was downgraded, which is, the president says that it's not really a big deal. In the eyes of the rest of the world, it's a huge deal. And when you see something like that happen, and you see currencies no longer performing, you see problems at home as well as abroad, you find investors at home as well as abroad that are looking to put their money in something they know that is a real asset. And gold is a real asset.
But we've seen this run up in gold. Yes, it's been exacerbated in the last week, but we've seen it now for 2 odd years and
Yes.
even longer. So this isn't just about the downgrade, is it?
It's not just about the downgrade. People are looking at the inflation-adjusted price for gold. It should be north of $2,000. So people look at it in terms of that. I think the most telling sign is that recently we've had central banks buying a tremendous amount of gold, and most of them have been Asian central banks, which is kind of demonstrating that the Asian markets who own a tremendous amount of U.S. debt are no longer comfortable with it.
One thing, well, that's a very good point. One thing that I fear is that we talk so much about gold as this flight to safety, and I fear that the average investor thinks that their gold investment is 100% secure, that they feel that there's no risk there. Talk about the risk inherent in gold at these levels.
To believe that there is no risk is very foolish. We are seeing a tremendous amount of volatility in the product. We're seeing $50 ranges overnight. And the range is $50, but we're seeing it trade up $50, down $30, up another 20, down another 50. I mean, it's very, very dangerous right now. If you pick your spots, you can do very well. If you're on the wrong side of the trade, you can get burnt. So, like I said before, there is a physical asset behind behind gold. So it's not just paper money. It's not just there's nothing fake there in terms of that. However, though there is that flight to safety, how safe is it? Right now, it's not that safe. You could have bought 1782s last night, saying, "Oh my God, this is $50 higher. It should go to 1850 today," and now you're looking at 1735 gold and saying, wow, I didn't make a good investment.
Where are you placing your bets for gold 6 months from now?
Jeez, that's a very tough question. I would say my year-end target for gold would be right around 1850. Because of the sell-off that we saw today, I would look for gold to retrace a little bit.
Yeah, we've certainly got a long way to go. It's going to be fascinating to watch this gold run or retrace whatever we have ahead. Thanks so much. Appreciate it.
Thank you.